Hi, team. Uh, Welcome back again. So, maybe today you might be seeing that index is up and it is going upside with a gap up. And this is a time where you need to leave your FOMO, fear of missing opportunities. So, only thing is you need to remember you should choose the investment wisely. Let it be anything that is. You should not chase the investment. So, that's a basic thing. So, today I would like to explore some points here. So the theme is invest less and hold for long so that you can control your emotions. That's a basic idea what I would like to share now. So thing is you will get money and you will get your life lead only by your regular job or business, not from the equity investment, not from the real estate investment, not from any other investment. So you should more focus on your job or business first. That's a basic point. That will give you periodically regular income. So you need to first earn the money before investment, and then it must be debt free investment only, because your monthly salary or daily income, I mean regular income, will come definitely on periodical basis. Let it be monthly, daily, weekly, something like that. But return on investment will come over a period of time, not like a 1 year, 2 year, 3 year, for anything that is. So only your daily business or job will give you regular income. So don't think that overnight in equity you are going to gain much. So you first you must earn before start your investment, and that must be the debt free investment. If you get the debt and then invest, you will end up with paying the debt back with interest, though your investment realized as a with high appreciation, but very less chances you will get the net income out of that. Okay. And my preferable thing is, first place is only for the money. Cash is king. That's a saying, basic saying. Second one is gold, because it has the liquidity at par with cash, meaning whenever you need money immediately to turn, then gold will turn into cash immediately. That's what the second option. The third option must be only land, because at the end of the day obviously you should have your own house. At the end of the day you must have your own house. So we need to try to avoid, you know taking loan and buy the flat plot, plot plot. That means anything, you should avoid that. So as I said, you will end up with again interest only. Your principal will not go off unless you pay the extra money to them. But at the same time you must have the land to construct your dream house. Let it be any area that is, it must not be in a prime area. Somewhere you must have that, or maybe you can buy small places also. And the last, equity. Why I choose an equity, I will explain as a last. Always this equity investment, mutual fund investment, everything people will fear more. They will take that as emotion. See, if you invest in the land, you will wait for 10, 15, 20 years, at least 5 years. But you cannot wait in the equity investment for 5 years. That's emotion where it is dragging most of the people. People might think that if you invest immediately it should go off. Remember that a company having lakhs of course capital and thousands of employed, so much logistic, and then it is getting just 4%, 5%, 10, 20% return. In that case, how your income will double? in short span of time. Say for example, a bank is there, started with 1 lakh capital, 1 lakh core capital. It turned into 15 lakhs capital over a 20 years of time, building so much into investment. Investment is building into technology, recruiting people, operating across the different locations. Still they are earning only 20% consistently. But how our income will grow only just by purchasing that stock? It will not go, right? So the problem with equity investment is more emotions. The problem with F and O, future and option clause, is more emotions. Only people are losing money just because of emotions. Otherwise, there is nothing. You know why that emotion is? Investing more and expecting return more. Where you invest less and hold for the long, then there are chances to get the return. It could be less, but there is a high chances of the probability, right? That's the reason I choose an equity as a last, and that too, I prefer myself, say, 1 to 5% of my income. Say if I am getting 100 rupees, I will invest only 1 to 5 rupees. That's it. Where I doesn't need that money for a long time. 1 to 5 rupees, you don't need that long term, right? You can easily invest. I'm just taking as 100 rupees as example, 1 to 5%, so that I can control my emotion on that part. And the other part is, to get benefited from the return on equity, you must have to go through a lot of whipsas, lot of drawdown. During that point of time, how you are controlling your emotions is more important. Let me show you one example here. Yeah, so as I said, let's take this Tata Motors as example. This is, I'm just try to example only, and this is my personal understanding or personal view. I'm not recommending anything out of this. I'm not a SEBI registered advisor. So if you look at this, as per the chart, it started, say, opening 20 rupees. So I request you to concentrate at this area where open, high, low will be shown, so that you can understand what I'm trying to say that. Okay. So say for example, it started 20 rupees and then it went to 71. So three times higher, and then again it fallen back to 18 rupees. Will you be able to hold where you buy at 20 rupees and coming down to 17 rupees house, in fact? Will you be able to hold? Don't you think your three times money has gone, and then maybe in a panic you could exit, right? And then again, from this 17 rupees, it went to 109, multifold, multi-bagger, what people used to say that. But would you be able to manage here in this fall? Again, from this 109, it fallen down almost to 11 rupees if you look at that. All your multi-baggers has gone. Less than 20, less than 17. And from 11 rupees, again it went to almost, 200 rupees. And thereafter again 25. See how much whipsaws, how you would be able to maintain your emotional during this point of time. And even from 24 as a low to high as, 600 rupees. In 2015 it went to 600 rupees, and again it took 1 year to come back to that level, and again from that 2015, 16, you can see high as a 598. So in 16, if you invested 598 rupees in the FOMO, if you bought this stock, if example, it took almost nearly, 6 to 7 years. 2000, what is this year? 2016, and now we are into 2023 ending. Almost 7 years. It is just 10-20% return. But what has happened during a point of time? See the whipsaws, how it is going on. How you will be able to manage all these drawdowns? See, catching multi-bagger, holding multi-bagger is really difficult, and it's a false statement. People will fall easily. But how you are managing your emotions is more important here. If you invested, say, 5 lakhs, initial days, people used to say that if you invest 1 lakh, if you invest 2 lakh, by now it will be turned into that many course, this many course and all. No one has not invested that much unless they have a clear cut idea, and that must be unused money, and they have overflown money, and they least care bothered about that money. Then only they will make. So you need to go through all these drawdowns, whipsaws before getting your multi-bagger return. Will you be able to hold your emotions? I don't think so, definitely. It's impossible. At some point of time, people can get fed up and they can exit from the stocks. That's what, if you invest less, then hold for the long, then your emotions will be in control. So let that go anywhere the index is. What your portfolio is doing is more important to you. Choose the correct stocks on your own research and consult your financial advisor, and then invest. And invest debt free amount, invest unused amount, invest for the long time, hold for the long term. Then only you will get benefited. Thank you.